presentation. Our next speaker is going to be Revathi Raghunathan, because now we are going to get more directly into the world of taxes. She's senior partner at ARCO and has over 25 years of experience in practice, consultancy, and teaching. She's also the chairperson of the Committee of Insolvency and Bankruptcy Code and managing committee member of the Hindustan Chamber of Commerce. She's also an author and also writer for several professional magazines. She's also a visiting professor for direct and indirect taxes at the Indo Chamber Training Center and faculty for direct taxes with MSME. As I said, she will speak on direct taxes, a part of the subject, a part of the budget that interests all of us the most. Revathi, over to you.
So thank you very much, Sudeep, for that introduction, and Hari Om and Guru Pyo Namaha to everyone here. It's a pleasure to be a part of this program, and especially when it's going to be, the takeaways are going to be done by the future bureaucrats of this country. And by the other speakers have told, we all have lots of expectations from the future bureaucracy, future leaders of the country, and there's no better way to do it than to participate in such discussions. So everyone who spoke before me has been talking about so many crores of outlay by the budget. What is it that is expected, and how the country is going to have an Amrit Kal in the next 25 years, and how the government has paved the way for the future of the country, where we are going to lead the world. Obviously, we are on the top, and we are definitely going to be right at the top in a few more years. And that is what the budgets have been actually implementing for the past few years. And that is where we all want to go also. But having said all that, we have to see the economics of the budget, right? It's nice to have grandiose ideas, grandiose plans, and where you see yourself. How do we go there? Obviously, we need some funds for that. And that is obviously going to come only people who have a little bit of background in economics. And I think that everyone, after a certain point in time, once we reach our adulthood and start our careers, we all will have some kind of a knowledge on economics, because economics is a part of our life. And you'll all know that what is the economics behind this budget. Okay, so every budget needs some kind of funds to be collected. And how is that fund going to be collected? Funds are going to be collected only through taxes. We all know for a government, there is no commercial activity whatsoever. It's only either through borrowings from RBI or the local banks, or through the international funds, and of course through taxes. So I'll be walking you through the taxes. What people think that taxes are a little boring, and they are a burden, and everyone is rather, what would I say, very emphatic about not paying taxes, and you think that taxes are a penalty. As future leaders of the country, what you should all think is taxes are not a burden, taxes are not a penalty, taxes are how we finance the government to give back to us. So having said that, I would just like to make a small presentation about this budget. What are the direct tax? Sorry, 1 minute. Can you see my screen?
Yes.
And it was slideshow. Yeah. So direct taxes is the one way in which we are contributing to the revenues of the government for them to implement whatever are the measures, what the government has in mind, measures for the progress of the country. So we all view tax as a compulsory payment. It is levied by the government on individuals or companies, and it is done only to meet the public expenditure for the public welfare. So what we should actually, our underlying thought should always be, I am contributing to the economy of the country, and the government is not penalizing me by asking me to pay a tax. I'm contributing for the welfare of the country. If each and every citizen in this country is going to have that attitude, then automatically our growth is going to be assured. So just a small definition of tax: it is a compulsory contribution. We have no choice. once you cross the threshold limit of your income, it's going to be compulsorily levied from you. And irrespective of whether, the service which you are expecting your government to render to you, whether it's rendered or not, you definitely have to be happy about paying your taxes. So what is this backdrop to this budget? Okay, for the past 2 years, we have seen, all of us have been drowning in the pandemic. Okay, it comes in one form or the other. It is coming in so many different variants, and it's hitting all of us. Those who didn't get it in the first wave or second wave are definitely being touched by it in the third wave. And it is in this backdrop that this budget has been presented. And the speakers before me said that, we moved from about, economically, we were in a very poor position, and from that we went into the pandemic, and now we are recovering a little. I would say that we are recovering quite well, and that is my own opinion. And you look at the budget, it is a budget with a lot of foresight. We are talking about 25 years. We are talking about a 5 trillion economy, a 10 trillion economy. And how is it going to be done? It's going to, all your income for the government is going to come only through these direct and indirect taxes. Indirect taxes will be spoken by by the next panelist. So I will walk you through this budget. See, the budget estimates a total expenditure in 22-23 as 39.45 lakh crores. Just to imagine the number of zeros in that is itself mind-boggling. Whereas the total receipts are estimated at 22.4 lakh crores. And already the speakers have spoken to you about the performance of the specific sectors. What is the expectations of the specific sectors? What is the expectation of MSME? We know MSME has literally gasping for breath, gasping for help from the government. And, the government is expected to improve the manufacturing activity. And one of the speakers spoke about the employment generation. How is all this going to be happening? This is going to be happening through the capital capex improvement which the government is doing. Again, for the capital expenditure, you need funds. So how do you do that? You have into the government. You have to mobilize resources. The government has to mobilize resources. And how is the government going to mobilize resources? It's going to mobilize again through the taxes and also by attracting private investments into the country. I'm not going to cover all the tax proposals. What is important, and where possible, I have mentioned the sections. Hopefully, you will note it down, and maybe you can look it up also in case you are not too familiar with this. So, you speak to the common man and you ask him, do you like this budget? He said, oh my God, if he's a tax-paying assessee, he would tell you he's not at all happy with this budget. This budget is very bad. There has been no change in the tax rates. There has been no change in the basic exemption limit. And, nothing which is going to actually allow me to have more cash on hand. This is what a normal citizen of the country is going to feel. But what we as rational people should think is that the government can't keep on reducing tax rates, because by now you'll all be knowing that we are the people who are contributing to the country, and two, it cannot raise the basic exemption limit. See, what happens if you raise the basic exemption limit? Automatically your tax base is going to get reduced, and if your tax base is going to get reduced, then automatically your income is also going to be, your revenues from taxes is also going to be reduced. So let us not look, henceforth we should educate the people around us that no, do not ask for this exemption limit raising or changing in tax rates, because the things which come to you are hidden inside the budget. So what the Honorable Finance Minister has done is that the first thing what she spoke about is the rationalization of the surcharge. Surcharge is the, if you know a little bit of economics, you'll know about the canons of taxation, where we say that a basic taxation system should be one which is elastic, which is able to bring in more revenues when the government needs the revenues. So surcharge is a percentage of the tax which is charged on the taxpayer. So 37, it has been rationalized for association of persons from 37.5% to 15%. Do you think is going to lead to reduction in revenue? No. Is an additional person in this instance is the large corporates which get together, large players who get together and what do you say, apply for tenders, global tenders. So in that case, what happens if their surcharge is going to reduce, automatically their costs are going to reduce and automatically they will be able to make a better tendering process. Similarly, on long-term capital gains on all assets, the surcharge is capped at 15%. Earlier it was capped at the higher rate and now it's reduced, and all capital gains, your surcharge is at 15%. So this is as far as rationalization is concerned. Next is the voluntary tax compliance. See, what happens is, like I told you, we are always very, what do you say? I forgot the adjective. We do not want to pay tax. It's taxation is an involuntary activity for us. Going and paying a tax is involuntary. So that is why we have measures like your TDS, where your tax is deducted at source, because the government wants to ensure that there is some, income which is assured to the government. So this voluntary tax compliance, there are many different types of returns which we file, and now they've introduced a new updated return, where in case a person, an SSE has not filed a return, or there is some income which has been missed out. I'm giving you a very, very simple explanation to this from the end of the relevant assessment here. Then subject to certain conditions, subject to some people not being allowed to file an updated return, and subject to, certain other factors being taken into account. This is actually being brought in to bring in the people who have utilized some of the loopholes within the, what we all have this, I would say that most of the common people have the auditor's ability to find the loopholes within any code, and they find these loopholes and they utilize it, given an opportunity to file an updated return. Of course, it is with a higher rate of tax of 25% and 50% for the 2 years. Then again, the cess and surcharge, what rationalization has been done, it has been done with a retrospective effect. Then there is a section called 14A, in which the cost of, in the Income Tax Act, there are certain sections which allows you, to enjoy certain incomes as exempt income. So you don't need to pay tax on those incomes. And again, we being these smart Indians, we always try to find a loophole, and we, in spite of the fact that the income is exempt, we try to take a deduction on the expenses towards earning that income. So section 14A has been rationalized. And then again, there are certain business expenditures which were disallowed. And I'm not going too deep into this due to paucity of time. And then disallowance of interest. This is when, interest which is paid is normally allowed as a deduction. But in some instances, especially in these difficult times, when people go and renegotiate with the financial institutions, then that interest is not allowed to be taken as a deduction. So this is as far as the amendments to the sections which were given. Then you have the socio-economic measures. See, we should not look at the tax sections, taxing sections as means of the government to just increase the revenue. Like I told you, revenue is what is going to lead to the public welfare. So the socio-economic measures which have been, which are going to be highlighted by these sections is, you have a concessional rate of tax for the newly incorporated domestic manufacturing companies. Like we said, manufacturing activities have got to increase for the employment to be generated, for revenue to be generated. So to encourage the newly incorporated manufacturing companies, they have extended the last date from 31st March 23 to 31st March 24. So there is a concessional rate of tax of 15% for these manufacturing companies. Startups, we talk about startups day in and day out, and the unicorns, the startups, the eligible startups. So much of facilities have been extended to startups. And now there is a tax holiday also, which was made available to the startups. And now it has been extended for one more year to 31st March 2023. And when I say tax holiday, it means that they do not have to pay tax on the income which they earn for any 3 years in a period of 10 years. Then you have the alternate minimum tax for cooperatives, which is reduced from 18.5 to 15% to make them on par with the corporates. This tax concessions for units in IFSC is one of the biggest socio-economic measures which has been brought in by the government. And, if you want a really highly informative technical session, it will take at least a minimum of 2 hours or 3 hours to cover the this IFSC, the International Financial Services Center, which as of now is only in Gujarat. And I think there are more than some 54 banks and other financial institutions which are there. And in the budget speech, also the finance minister said that they are going to extend this and the SEZs to the whole country. So there is a lot of tax concessions which have been given to bring in the non-residents to invest in these IFSCs, because the non-residents will be paying tax. Okay, the return of income for the non-residents in whichever country they are staying would be pretty low. Whereas if they come here, the income which they earn on the investment is going to be high, and they're going to get some really good tax concessions. So this is a socio-economic measure because we are bringing in capital from outside. Then next is the contribution to the NPS, where earlier the state government employees were allowed only 10% of the contribution, whereas central government employees were allowed 14%. And so they brought state and central on par with each other, and it's 14%. This again is, you get a tax deduction, but in turn, the capital is going to be utilized by the government. Then you have this, all of us individuals have many problems, and we are given a lot of deductions and exemptions which are allowed to us in our tax computations. So there is this section 80DD where there is a deduction which is given for contribution to look after a person with disability. So the taxpayer is making some contribution for some annuity or payment to a person with disability. And there was an issue, the earlier section was such that this, whatever amount could be withdrawn, it could be withdrawn only after the death of the person who was making the contribution. But since the person with disability will need the funds, sometimes need the funds while the person who's contributing is also alive, this relief was brought in. Then this is a very, very important deduction which has been brought in for the medical treatment. See, you are people with COVID-19 would have received amounts from the charitable institutions or from their employers, or the family is receiving a lump sum payment from somebody else who's a relative, who's a social service organization. So this amount received for the medical treatment on account of death is fully exempt. And then expenditure by an employer. See, this is receipt. The first section is a receipt in the hands of the individual. The second one is the expenditure by the employer who is giving the funds to an employee for COVID-19 treatment. So it will not be treated as a perquisite in the hands of the employer. Then you have this widening of tax base. Like I told you, what happened before GST was introduced. It was actually very difficult for the government to widen the tax base. If you see, actually, in a country of more than 1,400 crores of population, hardly 3 to 4% of the population pays direct taxes. And it makes sense, to bring in more people to pay taxes rather than the cream of the people, the 4% who is paying taxes, they cannot contribute the entire expenditure of the government. So it makes sense we have to widen the tax base. One of the measures was once GST was brought in, the tax base has been widening rather fast. But through the direct tax measures also, they have rationalized the tedious provisions, because of which the tax base is going to widen. What we should see is we should not have a very narrow view, have a broad view. You'll understand how this tax base is widened. You have the transfer of immovable property. You sell a property. When you make a payment, you have to deduct tax or before you make the payment to the seller. So the earlier section said it was only what is the consideration which you receive, but now the reference is brought in even to the stamp duty value, because in some instances the stamp duty value is higher than the consideration which is received. Then you have the what do you say? A person who's employed will receive any perquisites or benefits, but a person who's doing a business. So you have these distributors who are going to increase the business of the corporate. So as a part of the business promotion, they are given some benefits. They will be given some foreign tours, they'll be given some vehicles. So whatever is the benefit which is given to them, these people who receive it are actually supposed to pay tax. To ensure that they pay tax, the person who's giving them these benefits is supposed to deduct tax at the rate of 10% of the value of the benefit which is being provided to them. So automatically the person who's receiving it, earlier he may not have paid tax. I'm not saying he will not. He may not have paid. So he is now forced to come into the tax net. Now, in respect of payments to certain specified persons, I'm sorry I didn't put the section here. There is last year, there was 2 sections which were introduced to ensure that the TDS, the people, everyone files their returns. See, until and unless every single person in the country is going to, with taxable income, is going to file income, our GDP, our fiscal deficit is not going to improve. So to ensure that people are filing their returns, if any person is going to receive any amount, where the tax which needs to be deducted is in excess of 50,000, they should have filed their returns. If they do not file the returns, the person who's going to make the payment to them has to check whether they have filed their return, which they will do through a utility wherein they key in the PAN number of that person, and automatically the system will tell whether this person has filed the return or not. In case the return is not filed, the TDS has got to be deducted at the maximum rate. The next one, this is also again widening the tax base. Producers of cinematographic films and people who are doing event management, they make lump sum payments to artists or to other technical experts, and in case they are going to make any payment in excess of 50,000 rupees, the entire list of the people to whom they are making these payments has got to be given to the government, because most of these people may not be paying their taxes. Once this statement is submitted, automatically those people will also end up paying taxes. Then we talk about the revenue mobilization. All the other sections which I spoke to you about are also.
How many more slides are required? Just to
this is the last one.
Yeah. Okay.
Yeah. This is about the taxation of virtual digital assets. This is everyone would have heard about the NFTs, the non-fungible tokens. So they have been brought in, a definition has been got, and transfer, that is the sale of these NFTs and other digital assets, are taxed at 30%. So the government has to a certain extent legalize this, and tax has also got to be deducted on this. And also the gift is also going to be taxed. And other sections are, they have phased out exemptions, so bringing in more incomes into tax. So there are a lot of other things which need to be covered, but I think these are the most important ones. So over to you.